Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy FOMC Wednesday. It's going to be a big one, gang. I know that's said a lot, right? Every single meeting is the meeting of our lifetime. And this one is really interesting because, by the 7th of March, this event occurs, SVB, the reverberations occur. And all of a sudden, what seemed to be a pretty set path for the Federal Reserve to maybe close to a 6% target rate, right, where they would peak, turned into 4.5 to 4.75%, and now seems to have settled in around 5%. Now, why does this matter? Let me bring the website up here. And this is what we have here at 9:01 in the morning, obviously 5 hours in front of the FOMC. And you'll see here an 87, almost 88% probability of going to 4.75 to 5%, which does represent a quarter point hike. This isn't about what should they do. This isn't about speculating about what will they do. This is what is discounted. Because remember, gang, whenever we have volatility, whenever we have these sudden moves, it's always the chasm between what we thought was going to happen or what we didn't know was going to happen and what ultimately did happen. And then the readjustment of that is the game, right? The game is not predicting these things are going to happen, not even directionally necessarily. The game is always what is factored in, and then how different is it from what we thought, right? So that's where we sit. What gets interesting is, where do we peak? And there is a potential for May to hike again to 5 to 5.25%, which absolutely has been the most recent average for expectation. And then we level off in June. Now, the next question is, how soon, how quickly does the Federal Reserve start to cut? And that is probably where the Fed Fund futures, we as traders and investors, have it wrong. And we'll find out from Jerome Powell today. Does he agree with getting to 5 to 5.25%? Probably, because up until March 7, with day one of Humphrey Hawkins, that's pretty much where we were. So we're back there. Now it is, does he need to reset the expectations about how quickly the Federal Reserve is willing to cut? All right. So that's the narrative, gang. That's it. So the shock is not necessarily going to be a hike or two. That's discounted. The shock is probably going to be, we've got the tilt to more of a loosening monetary policy, the cutting a little too aggressive, maybe pushing out further in the year. That is data driven, gang. This is not speculation. This is just data driven. Let's look at what the data says. In this case, the Fed Fund futures, and everything else. I'll be straight up. Everything else, and we're taking a look at trading view charts here, falls a distant second. Technicals, levels, price levels, trends. All of this could change very quickly based on what Powell says. So, as always, gang, thanks for joining me for Charts and Coffee. Let's get to the questions. All right, first up is Jet Jockey. How are you, my friend? AMD, 1 hour. Yeah, let's do it. Let's take a look. And those of you that are either in the live trading for the DPMR masterclass, those of you, oh, by the way, I've been getting a couple questions since this is, I think, tomorrow or today is the last day for the sale that's happening. I always like to let you all know when things might be less expensive and when you all can save a little money, put that money in your trading accounts. So I got some questions about the DPMRs. No, the DPMRs are not part of the sale. The DPMRs are not available in the store for those of you that did email me. And those are only available with the class. So simplertrading.com/masterclass. And it will be that way for quite some time as I support the brand new adopters of this tool. And then we'll move on at some point to, and I don't know when that's going to be, but it will not be anytime soon. The other thing is, people are asking me, is the HPMR on sale? It is right now annually $7.99. Normally it's $11.64. It's $7.99. You'll see that in the store. Okay. You don't need a code for that. You do not need a code for that. So those of you that are asking, Rog, is it on sale? It's $7.99 for the year. Okay. So hopefully that helps. HPMR and DPMR. HPMR is for day trading. DPMR is for swing trading. And Jet Jockey's questions about a 1 hour short-term swing trade. 1 hour DPMR buy 95.60 and 95.10. Right. So you're thinking a small aggressive and be out by noon. You know, we had something similar, right? Yesterday on the 20th. Sorry, on Monday. Here is the 21st. And you know, one thing I will tell you, Jet Jockey, as the volatility increases and as the probability for follow through decreases, right? Notice that the indicator is starting to close the distance, right? You see how it's narrower between the yellow resistance and the gray support? When that happens, that also means our upside potential is less. So what I'll typically recommend, and we have live trading for the masterclass today. It's not too late to get the indicator and join me, simplertrading.com/masterclass. We'll talk about this in the class. We have to focus on moderate to conservative triggers so we can reduce our risk and increase the upside, increase the potential reward, because aggro to the first target is actually an upside down risk reward. So we'll definitely talk about that, but your timing is good. As long as we're out before the Federal Reserve, that's cool. Next up is NVIDIA, 1 hour riding the wave. Now, here's another thing. Let's remember that we don't want to day trade, but I love that you're looking at that 1 to 3 day window that we've talked about since last Tuesday as we get closer and closer to Powell. I don't want you using, and I don't think you are, Jet Jockey, but this is for everybody. The 1 hour is not about day trading, although sometimes we might end up with a day trade. You can see that we bounced off the gray area, moved up to the yellow. It should be at break even, if not a trailing potential at this point. So if we look at riding the wave here, let's forget this is a Powell day and let's kind of talk about it generally, sort of a generic DPMR. Top, middle, center. That's it. Top, middle, center in terms of the zone, right? And then we scale in accordingly. All right, next up. Hey there, Stacy. Yes, thank you. If this is a needle mover for you all, I know it is for me. I enjoy this 20 minutes with y'all before we hop into the Sector Secrets Mastery Room every morning. Yeah, I appreciate that, my friend, my fan club president. All right, Robert, good morning. I bought 1,000 UNG shares and at $7.20. Okay. I'm presuming on the weekly or the daily, it's a tricky one, right? If we go to the weekly, still in a downtrend. We go to the daily, you know, still struggling. We haven't put in a new low yet, though. That February 21 low at $7.14, you've got a great fill, you know, obviously. And we've got a similar trade going on right now in the Sector Secrets Mastery where we've bought UNG calls that expire in June. And we've got tolerance of really 25 to maybe even 50% of what we paid because it was such an inexpensive seasonal setup that allows us the latitude to deal with all this mess in CHOP and arguably this downtrend. So I've got skin in the game, right? So I do want to mention that. So based on the seasonal bullishness that I've mentioned a few times, remember, seasonals are not setups, right? Tendencies are not trades. But that said, historically, we're going to peak in June. Hence, that's where we have our expiration for the UNG calls. Great question, Robert. You know, how much of a window do we have? And that window is getting shorter and shorter. Here we are at the end of March, April, May, boom. So we're running out of time for UNG to do its thing. It has yet to do it, but at least it's not putting in lower lows any longer. So at least it's a step in the right direction. Okay, next up is, here we go. Mark says, good morning. Spot Forex. Yeah, there's a lot of financial instruments to trade. I'm a fan of Forex, Mark. I think a lot of you know my first three books. When I got a book deal, I was approached to apparently back the way I heard about it, because I remember asking Wiley, how did you get my name? They said, well, you're somebody in your brokerage told us about you. Like, really? Who knew? But my trading results were good enough. Wiley came to me and approached me with a 3-book deal. And it was on Forex, of all things. I love the Forex markets. In fact, when we go, and I've been trading Forex since basically late 99, early 2000. It's crazy to think about it. My first book came out about 7 years later. And one of the cool things about Forex is it allows us to take the pulse of central bank action. It allows us to understand rates. And part of the section in the newsletter, which I'm taking over as of this week in the market. If you haven't checked it out, feel free to. My mastery members, it will be part of your subscription. But if you haven't checked it out and you want to, it's a very affordable way to understand how I look at the big picture, whether that be sectors. Of course, something I do with the Sector Secrets Mastery. Forex, I'm the Forex trader in these parts, right? So I can appreciate that, Mark. We'll be talking about currencies as well, because they are a fantastic way to understand what central banks are doing, and then the ramifications of that in treasuries, in the LIBOR, in the, the reverberations are unbelievable when you understand what's happening at the currency level. So love Forex. Mark, the same tools that I use for just about everything else, except for volume tools, right? Because Forex is off exchange, they do work. And yeah, I love a Forex trader in the house. So I appreciate that. We will be touching on that topic quite a bit. Currencies, right? And I'll educate you a little bit about why and what they reflect in the newsletter. So we have a lot to share in the newsletter. This week's episode, or this week's edition, or whatever you want to call it, issue, is going to be focused on the current we have a financial crisis going on. How are we tackling that? And where do we want to focus? So super stoked. All right. Mr. Walker is asking about crude oil, gold, and bonds on the 1 hour. I love that you all are looking at that 1 hour chart, staying nimble. This goes back to that video that we posted at the Simpler Trading YouTube channel, 1 to 3 days, shorten the time horizon, look for short-term swings, use the 1 hour time frame, especially as we go into Powell. Crude oil got a heck of a reprieve. Couple things. Do we see in times of crisis bonds go up? Do we see it? Of course, right? Flight to safety. Gold does not benefit from flight to safety directly. I know that's probably different than what a lot of folks have heard, but gold benefits from the narrowing of the chasm between yields, which go down as bonds go up, and the rate of inflation, which has been fairly steady, if not ticking maybe up a little bit. When the chasm between the bond yield and the rate of inflation narrows, that gives gold the green light to move higher. So it's actually bonds in many ways, and inflation moving gold. Okay, so we know gold is another place that gets affected. And I think it was Bot and I were talking about this yesterday. Do certain commodities, this is the king of commodities, gang, crude oil, do certain commodities benefit from a fear environment? I'm not sure that I would put gold in that category, but remember, OPEC Plus, which is the central bank of the currency we call crude oil, right? That central bank, if you will, I'm using that term a little loosely, but that is what they do. They control the flow of crude, and they are standing by their production cuts. And when we wonder why we have a minor low on the daily and we're able to gain a little bit of traction, remember two things. One, crude on the daily was never in a downtrend. It was choppy, and choppy for the entire year, which means that oversold levels are buyable and frankly overbought. So take a look at that slow stow at the bottom of my screen. Those are shortable. So we're stuck in a range, right? The yellow multi-trend, that neutral environment, tell us so. Now, if we're coming off the lows and we've got the news from OPEC, makes sense that we're moving higher. All right, so that's crude. And then as far as gold goes, remember, if bond yields are going to adjust to whatever it is that Powell's going to say today, I would wait for the aftermath. Yes, there's probably a window into the FOMC decision, but I would do that as a day trader on the 5-minute time frame. And then after Powell, after the press conference, remember, gang, 2 o'clock, we get the statement. which is usually just slight modifications of the previous statement. The Wall Street Journal has a great statement tracker, so you can see, all right, what words did they change? So you can check that out. Google WSJ statement tracker, and it's a free service. Okay, the next thing is, what are they going to do? Hike or hold? Likely hike. That's what's priced in. The last part of this, and this is where it's going to get absolutely crazier than a bag of squirrels, the press conference. What is Powell basically setting the stage for? That's at 2:30, and it could last 30 minutes or longer. So the last hour of today and the way people managing money, looking at the end of quarter, this is going to set the tone, gang. This meeting is going to set the tone likely for how many more hikes are we likely to get? One, if not two, to get us to 5 to 5.25%. And then how quickly could we presume that the Federal Reserve is going to start cutting? Probably not as soon as we think, but they're also probably coming, right? Jerome Powell's delays are not his denials, right? He's going to have to cut, but he's got to load the bazooka first. So he is, right? He's the overlord of this market. Please remember, the macro right now begins and ends with Powell. And I'm not going to bet against central banks. I know a lot of folks think it's futile for a central bank, whether that be the Swiss National Bank, the European Central Bank, or even the Federal Open Market Committee, the Federal Reserve, to do anything about the environment we're in. Gang, do not underestimate what they will do to continue to prop up the equity markets and the economy. If the last, since 2008, has taught us something, don't bet against them. They're willing to do a lot. Don't bet against them, okay? I know it's an easy thing to say at some point the Federal Reserve is sunk. If I look back since 2008 financial crisis, we take a look at 2020 and in the pandemic crisis, we know their game plan. Will it stop working at some point? We don't know. We're going to see definitely the threshold of modern monetary theory pushed probably with this event. All right. So be careful with the 1 hour. Maybe Mr. Walker think with, the 5 minute. All right. So next up is, and gosh, is that a fake YouTube? Yeah, I see myself waving at myself. That's a little strange. Okay. So many fake accounts. By the way, gang, while I've got you here, I will never direct message you, DM you, offering to manage Forex or crypto to manage I will never do that. Okay. I will never do that. So if someone's doing that, tell them I said hi and then tell them to go pound sand. They are scammers. Last time I checked on TikTok, I have over 24 fakers. On Instagram, it's just as nauseating. On Twitter, it's just as bad. So I apologize, but you literally cut the head off one and 5 more pop up in their place. So please know, no one at Simpler will solicit to manage your money for crypto and Forex and whatever else. Like I said, tell them we said hi, and then go pound sand. All right. Trader Momo asked, "Are we trading the meeting this afternoon?" Trader Momo, I will be in the Sector Secrets Mastery Room in about 1 minute. We're going to trade the morning together and then prepare for the afternoon. So we'll be doing our typical day trading window until 10:35. And then we'll switch to our swing trading window, and then we'll be wrapping up around 11:30. This afternoon, gang, we have our second day of our DPMR live trading. So I'll be with the folks from the class from 2 to 4. And you better bet it's going to be a heck of a session. So I'll be in there with live trading for the afternoon during the statement, the presser, and the last hour of the day. And again, a quick reminder, we have our trader meeting. We have our monthly trader meeting. So if you are a subscriber of any of our rooms, options room, futures room, any of the masteries, and you're an annual subscriber, you should get an invite to that trader meeting, which I will be moderating with, I think, Henry, Bruce, John, there's a Chris. We have a number of our traders. We're going to be talking about the current environment and what we are doing and what we remember seeing in previous environments similar to this. John, 30 years plus, Bruce, 30 years plus. Chris has been trading, I think, 20 or 30 years. No, actually, Chris might be 30 years plus, if not even longer. And Chris, if you're listening, I'm not trying to make you any older. And then myself. So it's going to be a really interesting conversation. I'm looking forward to picking their brains too. So XLF, our last symbol before we move on. Hey there, green trend, but all the stocks except Berkshire B are under the 200. Any setups here? Well, green trend intraday. I don't have a green trend as of this moment. I have a neutral overbought. So if we're going to day trade it, C&E, if we're going to day trade it, let's keep that very short-term nimble exit. As far as financials go, I mean, obviously XLF is getting a boost as one by one different central banks are dealing with, the FDIC, the Federal Reserve, Treasury, dealing with Silvergate, dealing with Silicon Valley Bank. Obviously, Swiss National Bank is dealing with the UBS. They were the architect of UBS, basically, taking over Credit Suisse. So we have central banks stepping in. We have other banks taking a look at distressed banks. Kind of 08, but like I said, I'm going to be asking John this very question in the trader meeting this afternoon. He said, this is not 2008, gang. This is 2005. And that was an intriguing tweet from our very own John Carter. So I'm going to definitely be digging into that in the trader meeting. Gang, as always, thank you for joining me for Charts and Coffee. Full disclosure, I drank my coffee already. There's no coffee on my desk right now. But I will see you all. I will see you all tomorrow. Same time, same station. Be good to each other, gang.